Hey everybody, welcome to Soapbox Slam, where I get on my soapbox and talk about the things that I see going on. I was reminded that I should either shut up complaining, or the complaining wasn't doing anything, run for office myself, or offer solutions. And I want to be clear that, I don't know that I don't have a problem running for office. I would be a grateful servant of the office and the people. That's not I don't have a problem with that. And if I were called to serve, I would answer the call and serve. But that's not what I'm trying to do at this point in my life. Because I want to have a family, and I want to secure my real estate assets and my things like that before I embark on serving the public. But that does not mean that I won't offer solutions. And my attempt in all of my soapbox slams, or all of my commentation, ranting, complaining, and everything else, is really to find a solution. And I'm not dependent upon my solution alone. I would encourage anybody who has a wonderful idea or whatever else to run it past me, run it past someone, present it to the public, as I'm trying to do with Soapbox Slam. I did do a soapbox where I suggested that I think that we should be moving away from a point of trusting legislators to create laws for us and everything else, because time and time again we have seen historically that these legislators, certainly today, are so bought out and consumed by money and greed. And since, as another person pointed out to me, government serves the highest bidder. So since that's the function of government, to serve the highest bidder, the only way that the people can have a law created that protects them is for the people to have enough money to buy off the representatives, because that's how our government runs today. It was delusional of me to believe that the government and representatives are there to serve us, and should make laws, enact laws, and create laws to protect and make life advantageous and prosperous for all Americans, not corporate Americans and very wealthy people. So that was my ignorance and realizing what I believed the government to be and what the government really is, and his suggestion on how I should operate in today's world. Well, I don't want to operate that way. I think that kind of government should not exist. And so my solution to that, and my solution to not running for politics, because I want to focus on my family, and my decision to do these soapbox slams and everything else, is to present and come up with ideas and solutions to the problems. Hopefully, if enough people hear them and agree, or can tweak my solution and make it better, as long as your solution to the problem makes life advantageous for American people, and people in America, and everything else, then I'm all for it. And that's what I'm about, and that's what Soapbox Slam is about. So having said that, I'll start it off with this one. I have made many comments about the insurance companies. I absolutely do not like insurance companies. They do not operate as an indemnity, or a 501c3 that is advantageous to the American public. They are more concerned with their profits, and I find it very counterintuitive, or it's counteractive. I don't know what the right word is right now, but it's counterproductive to have a insurance company and insurance to be an indemnity on the assets that you have, to protect or to insure, or be an indemnity on your assets, to be a profit margin driven corporate entity. I think that's in complete contradiction, right? The idea of insurance is to insure your assets as an indemnity, to kind of hedge the risk on your assets, so that if something were to happen, you wouldn't be left completely high and dry. But an insurer company isn't concerned or does not want to operate where they are interested in your indemnity and their interest in your hedging your assets, hedging the risks on your assets. They're more concerned with their bottom line and continuous profit. To me, those two concepts are in complete contradiction. So my solution to the problem, to the issues in insurance companies today, and I don't have all the answers. These are just what my dumb nigger brain can come up with, right? So I'll just go through these notes and everything else. I personally think that any insurance that is mandated by law or mandated by a banker, a banking institution, needs to be heavily regulated. And saying that, so that means homeowners insurance, health insurance, and car insurance primarily. And then when you get into life insurance and other things like that, I think that the rules should be a little bit different, right? But since specifically with automobile insurance, since it is mandated by law, federally, statewide, and everything else, that you have to have insurance to have a vehicle, all vehicle insurance should be capped at $50 a month, period. Everyone is required to have it. Rich, poor, black, white, Spanish, whatever, it does not matter. The law states that you have to have insurance if you have an automobile. So if that's the case, then there should be no fluctuating prices on insurances for vehicle insurance. It's to protect the vehicle, your asset that's already depreciating in value, and the lives on the road. Should an accident happen, that they would have some added protections should an accident happen and they need medical attention due to the incident, right? And then of course there's random things like, you know, environmental stuff and things like that, acts of nature, that anything. But since it is mandated by law, to me there should be no fluctuation in price year over year. The only fluctuation price should be that the price of insurance that's mandated and capped at $50 a month would have an inflation rate added to it, so that it keeps up with inflation as well. So that cap is at $50. Everyone is required, and let's say it's $50 for every car, coupe, sedan, right? A certain style of vehicle, whether it's a Lexus or whether it's a Yugo, right? It's capped at $50 based on the size, the gas tank, based on that measure. $50 cap, period. That's it. Nothing else matters. Not the color, not the age of the driver, not the race of the driver, not driving records or anything like that. It's mandated by law, so there should be no discretion by the insurance companies on how they want to insure people or how much they charge for insurance or anything like that. Period. It's mandated by law. If it's a larger vehicle, let's say a truck or an SUV, it's going to be insured at $100. And then when you're talking about commercial vehicles and semis and everything else, that should be a little bit higher, maybe double, because it's also mandated. So $200 for something like that, right? But mandated, capped and mandated. And the only increase in those prices would be relative to inflation as time goes on. But there is no fluctuation between different insurance companies. Geico, this one, that one, offering this rate, that rate, whatever, all these different rates and all these different whatevers for a vehicle insurance, period. It's just uniformed across the board, stripped down. That's what it's mandated by law. So why is there any fluctuation in insuring, period? Mandated by law, that is required, period, point blank. If not, take it off the books and stop making banks require it as well. So that when I say stop making banks require it, that means if banks want to require it, then fine, let them require it. Nobody will buy insurance, especially at these rates. Make it optional. Nobody will buy insurance. Nobody will buy it. Nobody will want to do it, especially the way the insurance companies are treating people, and especially if insurance companies are making insane profits, like Allstate making $69 billion. Not all insurance made $69 billion last year. I'm sure that number will recycle among all the insurance companies because there's not true competition in insurance. There's not true competition. No. So this company will make that much this year or for 10 years, and then another company will make that much for 10 years, and Allstate won't make that much. And then it'll just keep rotating among them all the time. But there's no competition in insurance. It's not even a capital, there's no competition with it. There's no capitalism in it. And insurance should not be designed, period. It's an indemnity to hedge your risk on your assets and things like that. Why is it profit driven? It should not be profit driven. It is an insurance to hedge. It's to protect it's an indemnity. It's to protect your asset and hedge your risks. It's a supplement to make up the difference on any possible risks. So why is it profit driven, and why is it more than a third of the cost of your income, the third of the cost of your, let's say, car note, or a third of the cost of, let's say, your home bill? Your homeowner's insurance, right? So let me move on to homeowner's insurance, because to me, this is another one that needs reform. And these are my solutions to reform the insurance industry. I've done many, many, many posts about the insurance industry and the corruption that's involved in insurance. And this is my example of an entire show that talks about my solution to the problem of insurance. So it's not just me ranting, even though I feel like I may be ranting, but I've offered solutions to those problems, but I haven't been crystal clear about that. So I'm making a specific post to be crystal clear about this particular issue, insurance, why I have very big issues with insurance, and why I'm coming to the public to think about these issues with insurance. Think about my solutions. Come up with your own solutions, and let's get it moving. Let's start attacking our not attacking like physically. Let's start pressuring our representatives to work in our interest to fix these things, right? So residential insurance, right? I have a solution that I think is competitive. It's true market capitalism, and it would put the insurance companies back in check and get the costs in line. So residential insurance for your homes, it's excessive, and State Farm just decided that there's no State Farm insurance in the state of California, and the reason why is because they lost so much money due to the fires and everything else that they've had to pay so much money out. By insuring these homes, they've had to pay so much money out in California, and so now State Farm will not offer insurance in California. This is unfortunate, but again, you are a company, insurance, that is designed specifically to be an indemnity to help the public hedge their risks on an asset that they have. Why you are so driven by the profit margin as opposed to driven by the incentivizing homeowners to better care for the home, protect their home, do things to make the value of the land and the value of their homes higher, right? That to me seems more in line with insuring your property and indemnity, something to insure or hedge the risk of your assets. But that's not what they're driven by. They're driven by profit, and to hell with you as the homeowner and your desire to be to hedge and protect the risk against your properties in owning a property. It's a very, to me, two totally contrary goals for what an indemnity is designed to do and what a profit-driven company is designed to do. So residential homeownerships require that the banks, in order for them to loan you money, they have to, you have to go out and get your own insurance. You don't even own the home. So you're paying the bank interest on borrowing money from them to buy the house from the bank. And then you're paying the insurance to hedge the investment, to make an indemnity on your investment, to buy the home from the bank. And the bank has no invested interest in the insurance as well. That's all left upon you. That's anti-prosperous. That's anti-prosperity for the homeowner. That's anti-prosperity for you as an American and what you do with your money. What it is it's advantageous to insurance companies and advantageous to the bank that's loaning you the money to buy the home. When the bank is the one that owns the property, they should have a vested interest in the insurance and protecting the interest, protecting the indemnity and hedging the risk on their asset. But they're not doing that. They place that all on you. There are many ways you can restructure that. The bank should be responsible for the insurance up until the point that the house is bought off. Once the house is bought off, then then the homeowner is responsible for having insurance or not having insurance. That's one option to fix the homeowners insurance kind of conundrum requirement that we have. Another option to fix homeowners insurance is, instead of pooling all of the money that every person pays into for, because when you pay your homeowner's insurance, it gets pooled by the company, and they pool all that money together to get a bigger fund, right? Bigger, bringing more money. They pool all that, and then whatever Johnny and Danny do next door to their house, that is damaging to their house, I pay for it because we pool our money. So my premiums go up because of what they do. So, you know, they want us to be social, and it's socialist. It's actually socialist. They want us to be social in our responsibilities of paying for the insurance, and us to all have to pay more money based on what our neighbors down the road do in their house, right? So again, the bank that loaned that neighbor the money, there's nothing on their plate that they're responsible for, except for giving you the money and you paying the money back, to buy the home from them. And then the insurance company that's making all of this money off of us, whether Johnny or Susie do nothing, nothing happens in their home or not, it just builds up in the interest of the insurance company, and you don't ever see that money back, and whatever else, because it's pooled together. So another option would be to eliminate the pooling of money invested for a homeowner's insurance. Imagine the amount of jobs that would be created if you did something like, okay, all these companies, we're going to take my insurance a year is $8,000 a year for my homeowner's insurance. $8,000 a year, right? Instead of pooling my $8,000 with my entire neighborhood and then making it one big pot, imagine the amount of jobs you would create if you had a insurance broker or an insurance agent from the insurance company that you worked for, who was required to isolate your investment month after month or year after year, your homeowner's insurance, isolate that money, and then let's say their job is to be a certified financial advisor, to act and make investment to increase the amount of money that you've been paying year over year for your homeowner's insurance, increase and manage that money in a homeowner's insurance account, manage that money to the value of the home. Let's say with a 2% interest rate increase, to the value of that home. So let's say my home is worth $600,000, right? I've been paying my homeowner's insurance monthly $8,000 a month. This certified financial advisors, imagine how many jobs would be created. The certified financial advisor would advise this account, my single individual account, not pooled with the entire company, works for the company of Allstate, but not pooling my money that way, works for them and advises this money, and my home is market valued at X amount of dollars. So they raise enough money by advising and investing and managing this money that I keep paying into for my homeowner's insurance until it gets to the value of the house. And then once there's a certain value of the house once there's a certain value of the house that is created by the certified financial advisor who works for Allstate and is handling your insurance payment money each year, once you get to, my house is valued at $600,000 or $700,000, even though I paid $600,000 for it. These are all examples. It's not quite what my value is, but now they've managed the house and they've managed the money to be at $700,000. Well, now there's more than enough money in the account managed by the CFA over the course of years of you paying for your insurance. And then as things come up, it draws out of this direct account while the CFA continues to manage that money and manage and everything else up to the value of the house. Once you've reached the value of the house, your insurance payments would be lowered. Once you've reached that certain value to cover the value of the house, your insurance payments would be lower. The insurance agent would get not just a commission, but now he's getting a kickback on the CFA certified financial advising and running this account. And as it continues to go up, or however much more the money is, then it's there. It's always there. And the CFA is making money off of the investment over the years once you've reached to the value of the house, and then years beyond. They're still managing this house as long as you have the mortgage, and he's getting paid based off the investment and protecting the value and the asset of the house and accruing wealth of the house. What that will do is that'll allow homeowners to make investments into their homes, like changing their roofs, changing their things like this, adjusting their things like that, doing all these adjustments for the house to better the value, their prosperity, and the value of their home. So now the CFA is making money, the homeowner is making money because they're able to afford to take care of their homes and everything else, and it's a win-win situation. They can get paid from that. They can get a small percentage, a 12% management fee year over year, and then after it reaches the value of house, it goes from 12 to 20%. But the whole caveat of that is the money stays with the house. For as long as you own the mortgage and are required to have a mortgage with it, the money stays with the house. If you sell the house, the money then goes back to you because you paid for this to ensure the indemnity to protect the asset that you've had. The money goes back to you, and once it is done, a percentage of that money that's been pooled also goes back to the financial advisor who's been running the account. That would create so many jobs in finance and everything else. That would create a tremendous amount of jobs. Now, yes, these CFAs would have to be responsible investors. There would be caveats, limits, and protections to protect the actual investment, and they would be responsible for that, and laws and things can be created, regulations can be created to protect that but now we're no longer pooling money, and money's coming and going constantly based on what each individual is doing in their own house. I am not responsible for what my neighbor and how they want to treat or protect or respect or value their house. I'm not expected to pay for it, and my premiums don't go up because little Susie has a daughter who they irresponsibly didn't cover all their childproof plugs and stuck something in the plug and blew up the house, right? So that's another option, right? So that's two options I've just presented. You know, a third option for homeowners insurance, would be, instead of having the insurance company still responsible for that, you can take the insurance company completely out, which is what I opt because I don't like insurance companies. They're profit driven, and it's an indemnity to protect your asset. That's what insurance is, to ensure, hedge the risk against your assets, an indemnity, right? It's designed to help you protect your. So since the insurance companies are so profit driven and are only concerned with them making a buck, then take them out of the equation altogether, and you as an individual be allowed, if the banks require you to have insurance because they're giving you a loan, be allowed to create your own account that you cannot touch. The only way that money will be distributed from, it's like in a trust, and the only way that it can be distributed, or the bank or the account would, the loan, it would be even better if the bank that is loaning you the money to buy your house back created the account. The only way that you would be able to ever get that money that you were setting aside that would be for an insurance company is now going directly. My $8,000 that I pay a year in insurance would go directly into an account that's held by the very mortgage company that I get my mortgage from. And each year, every time I don't use it, that account is accruing interest. I myself am able to buy a CD or one other thing with that account, and the only way to draw that money out of that account from the loan company is a direct bid and engagement letter for work to be done on the house would be the only way that the money would be able to be distributed, right? So these are all options that we could use to make insurance more advantageous to everyday Americans, the residential homeowner, right? These are options that we can do that would be more advantageous and in our interest, not in the interest of making insurance companies wealthy. I mean, like I said, State Farm, $56 billion. Not State Farm. They this year they operate at a loss, but different insurance companies, they fluctuate because, again, so some insurance companies are extremely profitable and make a lot of money, and some insurance companies who had huge areas that were decimated by wildfire and everything else are now at a net loss because they had to pay out so much, right? So the point I'm making here is that these are solutions that I've come up with that, in my mind, to make homeowners insurance and car insurance advantageous to American people and make American people prosperous, not make companies prosperous where they're making billions and billions of dollars and reluctant to pay out for homeowner issues when the entire design is to be an indemnity, something that is used to hedge your risk, to hedge the risks on your assets. Okay, so those are my three options, right? Take the pooling, three options in residential home ownership, right? That's what I was talking about, right? Take the pooling of money and make each individual homeowner the State Farm agent or the insurance agent, individual CFA investors of your home, your homeowner's insurance, and it be managed in a way to the value of the house. And once it's managed to the value of the house, then they're able to get a percentage and everything else. But now the house is protected by backup money to protect the home, right? So that's one way. Another way is to take the insurance companies completely out of the equation and make it an individual mortgage account devised by the lender, since the lender is requiring you to have the mortgage, have the insurance in the first place. Make them, instead of paying the insurance company, there's a separate account that instead of paying the insurance company, you pay this separate account, and it's its own account that's building up for to ensure the risks of the home ownership, to hedge any risks on your asset, and everything else. So that's the second, third, and then the third one would be to so you got the individual CFA for every account. You've got the bank itself, and I forgot the third one, and I don't think I wrote it down. Anyways, I'm gonna move on. Okay, so those are some of my options for reforming insurance industries, right? I mean, the bottom line is we need to stop. You can stop mandating the requirement altogether and just let it be a free-for-all. That's another option too, right? Because again, that would still be advantageous to. I pay more than almost exactly half of what I pay in mortgage. Almost exactly half is what I have to pay for insurance. It's insane. It's insane how much I pay for homeowners insurance. And that's, I mean, to me, that's excessive. So I would stop you can stop mandating the requirements, right? Or if you're going to mandate these requirements, then there should be an automatic reduction. Since it's a mandate, there needs to be something that offsets, since I'm required to have it, what the initial cost is going to be. And we need to see that on paper, exactly what this offset is. And it should be a significant offset, because it's too much. It's too much, and the insurance companies are getting away with raking people over the coals and not have anything to show for it, right? So I personally would eliminate the insurance companies altogether. That's my personal opinion. The only other thing that I'm willing to tolerate other than eliminating them is two options. One, capping all of the automobile insurance that's required by law. And then two, creating, and with every insurance agency, CFA agents. Imagine the amount of jobs of managing all these accounts, the amount of financial jobs that you would create by doing that. I mean, that would be spectacular, a spectacular energy, and they would get wealthy. I mean, once you got to the point that this account accrued a certain amount of money, the value of the house with a little bit more, with a 2% interest, as long as that was covered and it was there and protected, that backup for the insuring the house, the money that's made after that, you know, a larger percentage can go to the CFA, and more money can be contributed into your account. That is creating recycling wealth. That is recycling wealth. That is how more money is made. And it would make more money for the homeowner. It would make more money for all these people who now are in the insurance agent, CFA, insurance certified financial advisor, ICFA. These will all be ICFAs, and they would get wealthy as well. I mean, it's a win-win situation. I don't see the drawback in doing that. I do see the drawback in pooling all the money. I do see that. I absolutely see that. It should all be on an individual basis, right? So my reforms and these ideas are not aimed to destroy capitalism. In fact, quite the opposite. They're actually ideas to actually instill more capitalism into the system. It's truer capitalism. It's more competition. It's pure competition. It's more competition and pure competition. So I do not understand, I do not understand why we are in a system that devalues devalues the homeowner, and devalues, and what I mean by devalue, I mean no longer makes us prosperous in any sort of way. They get the money, they get to run off with the money, they get to be billionaires and everything else, and it's insurance, an indemnity, a way to hedge your risk on an asset. There should be no profit-driven margin if you're an insurance company. It's contrary. It's contrary. They don't. Those desires don't align. It does not make sense to me. Your insurance, you're supposed to help. You're supposed to be a hedge. Why you're for profit and not a 501c3, I have no idea. But whatever the case may be, these are the kind of reforms that I think that would instill. It would still it would still encourage capitalism and money and growth. It would create a lot more jobs, and it would also get more and more people insurance, which would lower the cost. And why does it lower the cost? Because if everybody has it, then there's no need for the major fluctuations, because the money is being made to protect. And again, insurance is an indemnity, something that is aimed to protect, hedge the risks on your assets. So that's what I'm on my soapbox about. It was brought to my attention that I was just complaining, and I have complained about insurance a lot. I don't think I've ever made it crystal clear exactly what my offers of solutions to the problems are. So I made this particular soapbox to identify 3 or 4 options that are specifically designed to make the system better, my solutions to the problems. Have a wonderful day. Be kind, okay? Be kind to everybody. Be kind. Do an act of kindness for somebody. Please. One act of kindness begets another act of kindness. You know, it's all paid forward. Let's try and be kind. Have a wonderful day and do something nice for someone, all right? Talk to y'all soon. Have a good day.